Question number 14. Trial balance of Mr. X is given below. What are the requirements? Pass journal entries and prepare final account. So you have to pass the journal entry for the adjustments and then you can prepare the ledger. Let's start with the journal entry for closing stock. Stock related adjustments. The opening stock and closing stock both will be routed through purchases. That's how we'll start now. Okay. So here is opening stock and closing stock here being 3000. We'll try to finish off adjustment number 1 and 2 first of all before we go for the subsequent adjustments. Closing stock is all about related to the items purchased for sale to make a profit. Opening stock should be removed. After removing the opening stock, it will be added to where? Purchases account. So the adjustment entry for the stock, opening stock, purchases is going to be debited to stock, opening stock. This value being 1000 rupees. Second entry is all about closing stock. It's a new one. It reduces the purchases value and new stock asset comes here. To reduce the purchases should be credited and we have to debit the closing stock. Two purchases. The value being 3000. Is that clear? Repeat the same process for the closing stock of stationery. What you have to do? We have the opening stock of stationery. It should be removed. It should be added to a stationery account. In case of goods purchased for a profit purpose, buying and selling, then we'll use the term purchases. But if it is being the stationery, you name it being the stationery itself. So rather than the purchases, we'll have stationery account debit. Okay. To opening stock of stationery. The value being 250. Now we can go for the closing stock. That will be subtracted from the stationery account. Yeah, very good. So closing stock of stationery account debit to stationery account. 450 rupees. We have passed adjustments for the first two adjustments, adjustment entries for the first two adjustments. Now let's move on to the next one. We have to handle with the bad debt, provision for debts and all. Is that okay? So we have been given the bad debt, provision for doubtful debts, provision for discount and debtors and all. In these cases, it's better to prepare the working note. Working note related to the item appearing in the balance sheet. Start with the debtors minus bad debt, which is supposed to be adjusted, means value given in the adjustment, minus provision for doubtful debts given in the adjustment, certain percentage on this value. From there, provision for discount on debtors given in adjustment should also be subtracted. Similarly, the value to be adjusted in the P&L account. One is all about for the bad debt, another one is all about discount. Okay, here bad debt given in the trial balance, bad debt given in the adjustment. Okay. Now for the next year's requirement, provision for doubtful debts given in the adjustments. So much money is in need, where we already have PDD in the beginning, which is given in the trial balance subtracted. Balance amount Either it can be debited or credited in the P&L account. If the value being in plus sign, it should be debited. If the value is in minus sign, it should be credited. The same happens for the discount also. Right. Now we have been given the debtors 1000 rupees and debtors, discount on debtors, provision for discount on debtors, provision for discount on doubtful debts. All the 4 items are going to be incorporated. 1000 and discount on debtors 50, bad debt is also there. These are the 5 items are related to the debtors in the beginning. Bad debt and discount on debtors in the beginning 150. Beginning 150. We'll have only one adjustment. And we have the provisions for the doubtful debts as well as discount on debtors 150 and 40. 150 and 40 given in the trial balance. So I post that here only once. And whatever the values given in adjustment should be posted twice. Write off 100 rupees for bad debt given in the adjustment. So you have to write off that here as well as here. Of course, we don't have the discount on debtors in the adjustments, leave it. After this, the value being 100. Provision for 900. After the things, we have to subtract for the provision for doubtful debts, which is to be maintained with the debt of 10% on this balance 90. As it is an adjustment item, it should be posted twice and that will be posted here also. After this, the balance sheet item will be 810. Create provision for discount on debtors and reserve for discount on debtors, creditors 5%. On this, you can create the provision for discount on creditors, which is 5%, 40.5. Otherwise, I can round up to 41. That 41 should be here. 100 plus 100, 200 plus 10, 290 minus 150, you will get 140. That 140 is going to be debited to the P&L account. In case of discount on debtors, 50 with the future requirement 41, it becomes 91. From there, 40 is subtracted, 51 is debited to the P&L account.
Balance sheet total 769.
Okay, this balance sheet final value should be 769. Now we have to pass a journal entry for this. Let's see. I'm going to pass the entry here.
Bad debts to debtors.
Right. So entry number 1 is for bad debt. Entry number 2 is the adjustment of bad debt to the provision account. An adjustment of discount and debtors to the provision account. Third entry. Finally, the amount required to be either transferable from or to P&L account 140, fourth entry. And for this, fifth entry. So we have to pass 5 entries here. Entry number 1, bad debt. Bad debt will reduce the balance of the debtors. Bad debt account debit to debtors. This value being 100. Second entry is all about adjusting the bad debt to the provisions account. So bad debt account is adjusted in the PDD account. So PDD account debit to bad debt. This value being 200. And similarly, discount should also be adjusted in the provisions account, the third entry. Provision for discount on debtors account, debit to discount on debtors, the value being 50. And required PDD is created by charging the P&L account, for that the entry being fourth one. P&L account debit to PDD account 140 rupees. And next one is all about, for this 51 rupees, we have to create the provision for discount on debtors by debiting the P&L account. So 2 provision for
Discount on debtors.
discount on debtors. This value being 51. 51. Is that clear?
Yes, sir.
So the adjustment related to the debtors is over. Let's finally go for the adjustments related to the reserve for discount on creditors or provision. Usually we don't call this being the provision, it's a reserve in case of creditors. So it's a revenue, okay, which should be created at the rate of 5%. So then in balance sheet, how the creditors will appear? Creditors minus provision for discount on creditors. Only one item is subtracted. How this will appear in the P&L account? Very simple. Inverse of this one. Inverse of this one. If there is any discount on creditors, that should be first start with trial balance item and balance sheet means adjustment item. Of course, we don't have in the adjustment, so you can finish up this. With that, add the provision required. Provision required for creditors, discount on creditors given in the adjustment is added, and minus provision required already available given in the trial balance. Discount on creditors already available in the trial balance. Balance value is transferable to the P&L account. Usually in credit side, if the value is negative, then it will go to the debit side. So let me finish up those things. Creditors 1000 and discount on creditors and provision for discount on creditors. These are the 3 items. We start with the creditors 1000 rupees here and discount on creditors 35 and provision for discount on creditors 25. Okay, existing one 25. This is adjustment item. Now how much we need to provide? 5%. We need to provide 5%. So 5% on this being 50, ultimately the value being 950. We don't have any provision for discount on creditors in the adjustment, so we have only 35. Oh, provision for discount on creditors. Yeah, this value being 50. 50. So the value being 85. This is given in the adjustments both, recorded twice, and from 85, 25 is subtracted, so you'll get 60 rupees balance amount transferable to the P&L account.
Sir, reserve and minus amount.
Both are same. Okay, same. The ultimate value is transferable to the credit side. Here, the ultimate value transferable to the debit side. You can name this being the reserve. As it is being the revenue, it's going to be credited in the P&L account in case if it has positive balance. Now, you have to pass the entry for this one to be adjusted in the provision and balance amount required to be created. Okay, by crediting to the P&L account, second entry. So 2 entries are going to be passed here. Number 1. For the discount on creditors adjusted in the provisions account, the entry being provision will have a debit balance like, so I am going to use this now. Okay. So provision for discount on creditors account is going to be debited, adjusted in the provision for discount on creditors account, the value being 35 rupees. And whatever the shortage we have can be created by crediting the P&L account. So second entry being provision for discount on creditors account debit to P&L account, the value being 60. The value being 60. Hope you will be now able to understand all this. Almost 11 adjustment. Okay, 11 adjustments. So you have to incorporate all the 11 adjustments before you proceed. Right. Now, if that is available in the adjustment, you can create, but there is no such an adjustment, right? Clear? Discount on creditors, if it is available in the adjustment, you have to pass one entry for that, but we don't have that, right? So I may now try to adjust all these things beforehand. So I'm going to incorporate all these things while preparing the final accounts here. Is that okay? Now I try to incorporate some of the items here. Let's go for the items related to the debtors. Okay, bad debt 100. Already there is a 100. 100 plus 100, 200 becomes credit value 200. Naturally, what happens? Bad debt got eliminated. In case of debtors, we have to reduce 100 rupees. 1000 rupees in debit balance. Because of this journal entry, 100 rupees should be subtracted. Thereafter, the new debtors value is 900. How this is adjusted, you just see. Similarly, in case of PDD, we have already provision for doubtful debts 150. 150 in credit side. Provision for doubtful debts. Here is provision for doubtful debts another 140. 150 credit, 140 credit, 290. There's a debit of rupees 200. So then the provision for doubtful debts becomes how much? 90. This becomes only 90. Clear? This becomes only 90. I now score out the provision for doubtful debts. Clear? Apart from that, provision for discount on debtors 50. Already we have provision for discount on debtors 40 credit value, and provision for discount on debtors 51. So 40 plus 51, 91, minus provision for discount on debtors 50. So the ultimate value being 41. This becomes 41. With that, the provision on discount on debtors got eliminated. Discount on debtors, already we have 50 rupees in the debit side. Here this being the credit side value. So it gets totally eliminated. Totally eliminated. Apart from that, in your P&L account, you have to write 2 PDD 140 rupees and 2 provision for discount on debtors 51. That should be incorporated finally. So with that, we have posted how this will be having the impact over the various accounts in the trial balance. Clear? This one is over. Let's move on to the next one, related to the creditors item. Here, discount on creditors, debit. Discount on creditors already we have in the credit, gets totally eliminated. We don't have the discount on creditors anymore balance here. Provision for discount on creditors, 25 in the credit side. Provision for discount on creditors another 35 in the credit side. Okay, I think some error is there. Okay, discount on creditors 35, okay. Discount on creditors, 2 provision for discount on creditors, okay. Finally, we are in need of creation of the provision for discount on creditors under 60. Right. Yeah, okay then. Let's see. Provision for discount on creditors, we have 85 in the credit side. Okay, debit side. Here another 60 rupees in debit side, so 85 minus credit side value 35. Automatically, this 25 becomes how much? 50 rupees. 25 plus 60, 85 minus 35, 50. This becomes 50. Apart from that, we have one more item to be posted in the P&L account, which is nothing but provision for discount on creditors, the value being 60. So we now have the adjusted trial balance to be posted with these three more records to be carried over. Few more adjustments are left over. What are they? Related to the stocks. One is all about business goods, another one is consumable goods. So I am going to incorporate all these things here. Purchases already 5,000 rupees debit side, another 1,000 rupees debit, 6,000 minus 3,000, then the purchases becomes 3,000. This is adjusted purchases. Adjusted purchases. And opening stock credit. So the opening stock credit gets totally cancels the opening stock balance. Instead of that, we now get closing stock debit. So rather than it is being the opening stock, it becomes closing stock, the value being 3,000. Similarly, stationery. Already we have stationery 800 rupees. Debit another 250. 800 plus 250, 1,050 minus 450 subtracted value. 600 will be the final value. This 600 is the stationery consumed. Though we have purchased for 800 rupees worth stationery, we have not used it completely. To the extent of stationery consumed, used will be your expenses. Whatever the stationery you have, find out the closing value. You subtract the closing value, balance will be considered as consumption. So here we have found out the consumption. And similarly, opening stock of stationery 250 in the debit, that becomes credit here, so got eliminated. This 250 is totally eliminated. Instead of that, we get a new stock called closing stock of stationery. So it is now replaced with closing stock of stationery, the value being 450. So now I have just incorporated the adjustments in the trial balance. So now what the trial balance we have is nothing but adjusted trial balance. Of course, few more items to be posted here, like in P&L account, these three items also being going to be incorporated, right? Now let's see. Let's see. We'll prepare the trading and P&L account as well as balance sheet. Trading and P&L account and then balance sheet. Trading and P&L account. And then balance sheet. Yes. Purchases. We have adjusted purchases directly debited to the trading account. The value being 3,000. The next one is all about carriage in. Carriage in. The value being 1,000. Admin expenses 1,000. Selling expenses being another 1,000. Fixed assets 4,000 rupees in balance sheet asset side. Yeah, you can speak slowly, no problem. Okay, 4,000 rupees. Investments, assets, here the value being 2,000. Debtors, asset, the value being 900. Cash, here, cash, the value being 1,000. Stationery, where will it come? Come on. Where will it come? Stationery. P&L account or balance sheet? Okay. Okay. It should come in the P&L account, stationery. Okay. Only the stock of stationery appears in the balance sheet asset side. Closing stock of stationery will appear in the asset side. So stationery stock. This value being 450 as well as closing stock. The normal business stock. The value being 3,000. Now we still have provision for discount on creditors. That will be subtracted from the creditors value. So creditors minus provision for discount on creditors 50. Balance value will be the outer column. Sales should be in the credit side by sales. This value being 8,000. And capital liability side item, we start with capital value rupees 5,000 in the liability side. 10% loan, 10% loan value being 4,000. Creditors, already we have a line for this, 1,000. After subtracting 50, it is 950 in the outer column. Provision for doubtful debts, 90. Provision for doubtful debts. From the debtors, you have to subtract the PDD, which is 90. And provision for discount on debtors, discount, which is 41. Come on, tell me what is the ultimate value? 769. 769 will be the ultimate value. Apart from that, in the P&L account debit side, you have to record these two. PDD, there's a shortage in PDD, so we created the PDD further by charging the P&L account. Similarly, provision for discount on debtors also created. This value being 51, and here provision for discount on creditors, which is created at rupees 60. So we have posted everything, including the adjustment also be incorporated here. Now finally, I'm going to tally and find out the GP and others. So 8,000 rupees, and my GP here being 4,000. So GP here being 4,000 rupees, the total of the P&L account being 4,060. 4,060. And get me the net profit here. Come on. What's the net profit value here? What's the net profit value? 1,269. Okay. 1,269 net profit. $1,269 transferable to the capital account can be added. Come on, get me the total of balance sheet. I think it is 11,219.
Yes, sir.
Okay, with that all the concepts related to this one is over. Clear?